We believe having the physical gold in the vault makes a lot more sense than selling it at these prices. We would really like to look at banking some of this gold, keeping it physical, and just, holding it for the long-term future.
Hey friends, thanks so much for tuning in. I have a very exciting call for you prepared here. I've got the president of MX Gold Corp, Akash Patel, and the CFO of MX Gold Corp, Kenneth Phillippe, on the line. They have a combined total of 20 years of mining experience. We're going to talk about physical precious metals, hyperinflation, and the world at large. Gentlemen, thanks so much for joining us.
Great.
Thank you very much.
Gentlemen, I wanted to have this call with you because, your company is located up there in Canada. You're about to pull real metal out of the ground, and we focus on real physical precious metal, not the paper stuff we see at the comics. And as you guys both know, we are seeing right now what can best be described as a run on physical metal over at the COMEX, with inventories in physical silver hitting an all-time low just this past week or two. Meanwhile, there are a couple hundred paper claims for every 1 ounce of gold at the COMEX. Gentlemen, what are your thoughts on these developments when you're in the business of dealing with real physical precious metal?
I can take that one on the cash.
Go for it.
This is Ken here. This whole entire industry, the gold market, as you know, is fueled by the economies. And with the economies, the state that they're in right now, it's been, let's call it 8 years in the United States where they're continuously printing, more money. This is why I understand most people would like to put gold into their national portfolio, because it's clear to me people have to take precautions against the unknowable future, which is happening. We don't know what's going to happen tomorrow. We don't know if China's going to blow up. We don't know what's going to happen in the U.S. at any given time. They continuously keep printing more money. So what we're doing is we've got a company here that we've been continuously funding for the last 5 years. We've put somewhere between, let's just call it $15 million into the company to acquire all these assets. And what we want to do is we want to pull out the physical gold. We want to take gold, we want to pay off all the bills, we want to produce, and then what we want to do is we want to take this gold and we want to store it. We believe having the physical gold in the vault makes a lot more sense than selling it at these prices. Gold is ready to move. We believe it's going to continue to rise, and we're going to get producing here as soon as possible. And when we do that, we're going to be storing our gold and holding it for the long term.
Okay, wait a minute. That's a blockbuster statement, because we have interviewed Keith Nuemeyer, and Keith Nuemeyer has been sounding the alarm about really the paper shenanigans we've been seeing at the COMEX and over at the LBMA. Keith has been sounding the alarm for a very long time, and he has personally put out the call, the clarion call, to other producers, silver and gold producers, silver specifically, asking them to consider withholding some of their production in physical form as opposed to letting it go out into the market at these artificially low prices. So you're telling me that part of your business plan, Kenneth, is to pull the metal out of the ground and keep it as opposed to selling it at these prices?
Our directors have been talking about that recently. The board, they're all a bunch of gold bugs. So everybody is true believers from the board. We've talked to some of our largest shareholders. We're not in production yet, but gearing up towards production, this has been one thing that we've all been contemplating. We truly believe that people in the United States are not investing into T-bills. Government paper is just not what people want at this point in time. Because gold is liquid, and under all these certain market conditions, we truly believe that the investors are going to come and acquire gold and not stop. Owning the physical gold is the only way to really see a major increase. We just don't know. The United States, again, has gone on for 8 years consecutive, and they haven't gone anywhere. They just, everything that's going on in the world, they're not moving forward. They continue to print paper. The paper is worthless. Gold is the only physical value we see out there. We also have a lot of silver. We also have a lot of copper, which are the byproducts. that'll pay for our gold production. We also have a massive tax loss. So technically, going back to what we were talking about, yes, we have been contemplating about holding the physical gold. You use what you need to sell to pay off all the bills, to pay off all the employees, to keep the company moving forward. But we would really like to look at banking some of this gold, keeping it physical, and just holding it for the long-term future.
Yeah, it's a brilliant plan. And again, getting back to Mr. Nuemeyer, he's advised or suggested that a great approach for silver production companies would be to withhold just 20%, not everything, 20%. And let's put a dent in what's going on with the fraud over at the COMEX. And I think this is a terrific story. So tell us a little bit about MX Gold. I want to ask you about George Soros in a second, fellas, but tell us about MX Gold. You're in a very safe jurisdiction up there in Canada. How far away are you from production?
I just got a full update from Lauren Warner, who's our QP. He has just met with the Ministry of Mines. He's dealing with the Ministry of Environment right now, and everybody is quite pro. They're for us, the community, and we believe, we'd like to be conservative and say we're about 9 months out away from production. But when I say 9 months out, that would be our small mines permit. Now, we just received our 10,000-ton bulk permit, so we will start blasting and shipping ore within the next 3 to 6 months and delivering it to the mill. And then within the last 3 months, which I said 9 months, we'll be refining so that we're using the ore to get our best grades and our best possible recoveries out of the mine. So safe to say, I would like to say 9 months is when we'll be producing. Along with this, and people don't really understand the story, what we did is this was an ex-producing molybdenum mine. It was called Roca Mines way back in its day. The stock went from 15 cents to roughly $4 a share, had a $500 million market capitalization. It was one of the darlings of producing mines in British Columbia for moly, and it shut down. Moly prices went from $43 a pound down to $7 a pound. It could not recover. So what we did at MX Gold is we acquired the mill for pennies on the dollar. We acquired a gold mine down the road that's fully developed by Newmont, Cominco, British Petroleum, and we combined these assets and said, let's invest some hard dollars, put these assets together, make a beautiful marriage, which we call it the Willimax. And then what we did is we're starting to put the infrastructure in place, put the key people like, again, Lauren Warner, who helped put Detour Mines together. He put put all the dots together to get the reserve report and so on and so forth. We've been actively looking at different projects in the surrounding area within a 200-kilometer radius. Again, I think I mentioned earlier on, we have a $50 million tax loss, which will produce tax-free for a year and a half. This combination, this marriage in this company, we can't find a better fit. And if anybody knows the area up in Revelstoke in British Columbia, the whole community wants to be employed again. This used to employ over 200 people. It's good for British Columbia. And the resource there, the mineralization, everywhere we go, within 15 kilometers or 30 kilometers, there is ex-producing mines everywhere. There is, and we have a monopoly. We are the only fully permitted mill tailings pond in southeastern British Columbia. We have it all. So now what we need to do is start taking these assets, acquiring them, adding more ounces to the books in the next 6 months to a year to show the world that we can stay alive here for 10 to 20 to 30 to 40 years and continue to grow.
Wow, it's an exciting story. The reason I love to have these conversations with these new, existing, emerging mining companies or the big boys that have been out there, the guys like Keith Nuemeyer, is that we can see what's going on, guys. The smart money is moving into precious metals, especially on Wall Street with these mining stocks. Take a look at the GDX, the GDXJ. You guys operate in the real world of physical precious metal, namely gold. It's being reported that George Soros is widely selling stocks, shorting the market, and buying gold and gold equities. But, truth be known, Soros is buying largely paper gold instruments. So, gentlemen, what's the difference in your mind between a Wall Street gold ETF, physical gold in your hand, and maybe making an investment in a gold mining company share?
Oh, wow. We are a smaller mine. We realize that. And the ability for us is we've got a project that is almost turnkey and ready to actually physically be in the green right from the bat. And we've got a large tax loss. And that would help us actually become even more attractive as soon as we get this project going. There is potential for growth there, is there not, Ken?
Oh, yeah. I think the question was more related upon, why invest in an ETF, electronic traded combination of investments versus a company that's going to be pulling out physical gold. Is that correct, Sean?
Yeah, and I think what I'm driving at, fellas, is that central banks print the currency into thin air, right? They create it out of nothing. The same thing is going on at the COMEX. There's way more paper gold than there is physical gold. So I think the beauty of what's going on here, and we can all see it, is we all know the smart money. People like Eric Sprott, Rick Rule, people who are well-heeled investors are taking advantage of what's going to happen with gold and silver prices. You guys said it yourself. You know gold is headed higher simply because of what central banks and nations are doing. They're printing themselves into oblivion. What is our alternative? How do we save ourselves from hyperinflation? We buy physical precious metals. So to talk to guys that run companies like you guys do that are dealing with real physical metal, that's where we want to be. We want to have real physical precious metal in hand. And what Soros is doing, he's telling the world he's buying gold, but he's really buying Wall Street paper instruments. He's not buying the physical stuff as far as we can tell.
Yeah. Let me make a comment here about what you started to say earlier on there. Let's look at Fort Knox. Let's look at the audit. What was ever told, what was there? Nobody's allowed to go into Fort Knox. Nobody knows actually who has physical gold and who doesn't.
I think the last audit of Fort Knox was, 1956?
That's right. And, physical gold is key to have. Nobody has it because when you ask to see it, nobody produces it. This is the thing. If they were actually to deliver to all those paper contracts, all the gold, I do not believe they would be able to deliver all the gold to the paper contracts. Therefore, if it did happen, gold would go through the roof. Now, as you were saying about smart investors, I agree. Eric Sprott, he's the perfect key person to talk about this project. Let me tell you why. Eric Sprott knows British Columbia. Eric Sprott has just made a massive investment into another company called Barkerville Minerals. Barkerville Minerals is breaking all-time highs every day. They have 300 million shares outstanding. He's dumped in, I think, 10 or 20, maybe 30, $40 million now into this. Eric Sprott originally funded Roca Mines, which built the mill here in MX Gold. He has raised over $40 to $60 million with his funds to help us build this mill. This mill that we have here sitting in Revelstoke was built in 2007 and shut down in 2012. It is virtually brand new. To rebuild this mill would probably cost you somewhere between $100 and $200 million, plus years and years of going through ministry, environmental, to build the tailings pond. We're fully permitted. Eric Sprott, as you said, as smart investors, is the perfect guy to talk about because he put in $40 to $60 million from his fund to help build this mill in British Columbia.
Well, that's the type of information you can only get by talking to the source, by talking to the people who run the company. I mean, as you guys know, Eric Sprott has encouraged companies to hold some of their production back, just like Keith Nuemeyer has. And he's suggesting the companies hold back some of their gold and or silver production as a cash position. And it sounds like you're willing to consider that. It sounds like that is part of your business plan. Do you guys know what percentage of precious metals you might want to hold back?
Again, once we go into production, we'll analyze that. We'll look at how much gold versus copper versus silver. We're going to be pouring dory bars on site at the mill site. So, with our flotation gravity circuit, we'll be pouring hopefully 20 to 30% of all production physically into gold bars on the project.
Okay, fellas, so we know what's going on with the central banks. We can see what's going on with nations around the world. I mean, take a look at what's going on with Japan. We talk to a pundit often, a good friend of ours, Andy Hoffman, who's an analyst here in the United States, precious metals analyst, and he's predicted for a very long time that Japan will be the first first world nation to hit hyperinflation. Now, as we talk about hyperinflation, we look at what's going on in Venezuela. I think it's a real harbinger of what could come for really all of the nations in the world eventually, because all of the nations have fiat currency based only on confidence. Now, maybe the king right now still is the petrodollar, but I think that the day for the petrodollar is quickly coming to an end. We can even see what's going on with the Saudis threatening to sell all their treasuries. When we talk about hyperinflation, John Williams from Shadow Stats, an economist who deals with the real numbers, has said that hyperinflation for the dollar is not a matter of if, it's a matter of when. It's baked in the cake, and it cannot be reversed because of the malfeasance of the Federal Reserve. Gentlemen, here's the question. For listeners right now, what would you recommend in terms of allocation? How much physical gold, how much physical silver do you think a person should own these days, given everything we've talked about? Are we talking 10%, 5%, 50%? How much of your total assets do you think should be held in physical precious metal or mining shares?
Yeah, I mean, that's personal preference. Everybody has their own decisions and what they like to invest in. But when it comes to physical gold, silver, when I grew up, I always had seen the gold coins, silver coins from my family members, and they were always collecting them and buying them. And I thought it was a really neat thing. Now, if I would have done that way back when I was younger, the percentage of dollars that I would have now today, because gold was probably $200-300 an ounce, and now we're looking at close to this $1,300 per ounce U.S., I'd be a very wealthy fella. But I mean, here's the thing. I think, if you take 10% to 15% of your holdings and held some physical metal, there's nothing wrong with that at all. Because I'm a gold bug, obviously I'd like to say more, and a lot of my portfolio in the last, 4 to 5 years has been accumulating these junior golds, because most of the junior golds here, which are near-term producers, are what I've been investing into. About 3-4 years ago, I invested into a company called Klondex Mines, KDX, on Toronto. I put my money in at around $1 per share. It's now trading at all-time highs at $4.66 per share. Klondex Mines is the perfect example of what we're doing here with MX Gold Corp. They went out, they bought a mill from Newmont for $110 million. They took one mine, and then they took another mine, which is very similar grades to our mine, which is close to 5 to 7 grams per ton gold, and they put it into production. So they said what they were going to do, they did what they said, and now it is paying off. Their stock is trading at $4.66. They have 150 million shares outstanding, and they've got a market cap of close to $670 million. That is our business model. We have acquired our mill 100%. We have acquired our mine 100%, and we're looking at adding on other mines. Before I skip this topic, though, the reason we have put so much effort and energy, and we've been looking for other projects in the surrounding area, is the last drill hole back in 2005 on MX Gold was 105 meters of almost 6 grams gold. Now, if anybody knows the mining business, and if anybody knows anything about drilling for gold, if you hit anything over 20 to 30 meters, you're pretty excited. The last hole was 105 meters of almost 6 grams gold, and that's only about 300 meters out from our main deposit. So what we've decided to do, and Lauren Warner's put this plan together, is we'll start doing some extension drilling immediately, and that's how you expand your resource. Now, there is a neighboring project that just recently hit some major finds right connected, contiguous to our property. I don't want to say the name of it due to some confidential reasons, but that deposit that they've just found would tie into our deposit, which would deliver more ounces to our mill immediately. So as we move forward, we've got a great extension plan, we've got a great expansion plan, and the blue sky is essentially unlimited, being in this very resourceful, rich, blooming area of minerals that we have situated ourselves with right near our mill.
Gentlemen, I know we're running short on time. Akash, I just want to throw it back to you here to ask you one specific thing here. I know you were born in Canada, but you're of Indian descent. As Kenneth just hit on, most people in the United States, and I suppose Canada, have never held a real gold bar or gold coin in their hands. They don't own them. Most people have never seen them. It's been taken out of our money. By contrast, in India, there's a very different culture. The culture has always valued physical precious metal as a sign of wealth and as a way to protect wealth. Tell us about that. Tell us about the culture of India and how you see it.
I mean, gold is a big deal in India. I mean, it's used for weddings. It's used in dowries when people marry their daughters off. It is used as a gift. It is considered the ultimate gift in India. And prices of gold, whether they go up or down, the culture will still continue to buy and exchange gold. There's no doubt about it. It's a big part of their culture. It's almost as if it's how do you say? It's almost like a given transaction when weddings or cultural gatherings happen. Mm-hmm. And that is not about to change with a country that has 1 billion people.
Gold is sort of in the DNA, isn't it, in India? I mean,
it is in the DNA. I mean, not all metals, just gold.
Okay.
Silver, maybe, but gold, yeah.
Well, I just find it interesting because, as we have this conversation, again, most of our friends, neighbors, and colleagues in the United States don't speak this language. They don't understand what a central bank is. They don't know that their fiat currency has lost 95% of its value since 1913 and the founding of the Federal Reserve. They don't understand hyperinflation. Most people aren't even following what's going on in Venezuela. So I think it's just really important to have this conversation because there are nations around the planet where the people have not been brainwashed. They understand what real money is. They understand the value of gold, and India is definitely one of those nations.
Well, Sean, I just want to chime in there. It's Ken again. I have a close associate that just came back from China, and he went to Beijing and to Hong Kong and Singapore, and he said that there is still people lined out the doors to get into these gold shops. Everything in China is physical gold. They're selling gold bars. They're selling gold ornaments. Everything in China is being sold. It's still busy. They say it's not busy in China. He gave me photos of cranes and buildings and high-rises and the streets busy as can be. So I do believe as well, and we never touched on this, that China, the economy, the numbers say they're slowing down, but the people and the economy there, a slowdown in their economy here is nothing. There is a lot of people and there's a lot of gold buying still going on. And he's got photos of people lined out the door, lining up to buy gold at these shops there in China.
Well, I think it's a very interesting story. I think the story of MX Gold is a very interesting story. And guys, I really appreciate you listening to this conversation and sharing it with those you care about, because pretty much everyone we've spoken with in the gold and silver mining space, every CEO, every CFO, every president we've spoken with over the past year or two, those stocks are now higher than when we had our original conversation. I do not hold a single share of MX Gold, full disclosure, but I have my eye on them now. Gentlemen, could you tell us what the tickers are?
Yes, the tickers on the TSX Venture is MXL, so that's Mother X-Ray Larry, and then on the OTC QX listing is DTVMF, so Donald Thomas Victor Mother Frank.
Well, gentlemen, very good. Thank you so much for your time. Our guests have been Kenneth Phillippe. He's the CFO of MX Gold Corp and the president of MX Gold Corp, Akash Patel. Guys, thanks so much for your time.
Thank you very much.
Thank you.
All right, guys, thanks so much for listening. We very much appreciate your support at sgtreport.com. Real news 24/7. Have a great week ahead. God bless.